Welcome to the Deep Dive. We're the place where we take source material, unpack it, and really pull out those critical nuggets of knowledge for you.
That's the goal.
Today, we're looking at something pretty specific in financial reporting. It's this common challenge, moving past just, preparing the statement.
Potentially analyzing them.
Yeah.
We're looking at insights from a financial reporting examining team, and they flagged a really significant gap.
Okay.
People seem pretty good at putting the numbers together, compiling the financial statements, but where they often stumble is interpreting what those numbers really mean, what story they tell. It suggests there's a bit of a disconnect, in understanding how the figures are composed and what their implications are.
Right. So that's our mission for this deep dive. We want to unpack the key reasons why people struggle with analysis. And maybe more importantly, look at the concrete strategies this examining team is suggesting to, bridge that gap.
Yeah.
And this isn't just for students, is it? If you've ever stared at a balance sheet or an income statement and just wanted to really get the story behind it,
then this is definitely for you. It's about decoding that narrative.
Okay, let's dive in then. Unpack these challenges. The examining team found some core reasons analysis questions don't always score that well. What's the first sort of major pitfall they pointed out?
Well, a really critical one is the lack of workings shown for ratio calculations. It's a bit like a black box sometimes.
Okay, so just the final number?
Yeah, you just provide a final number, and if it happens to be wrong, you get, 0 marks for it.
Ouch.
But if you show your workings step by step, even if the final answer isn't quite right, you can often still get marks. There's this own figure rule.
Right.
It means correct parts of your calculation method can still score points. It's really about showing your thought process, not just, magically producing an answer.
That's fascinating. So the journey to the answer matters as much, maybe even more in some ways, than the destination itself.
In terms of demonstrating understanding, yes, definitely.
Okay. What else did they observe? What other common issues came up?
Another frequent problem is people just stating that a ratio went up or down.
Like gross profit margin decreased, full stop.
Exactly, without giving any explanation of why that might have happened. And this points to something deeper.
Which is?
Often, it's a lack of understanding about how different parts of the financial statements and the ratios themselves are actually interconnected.
It's like saying the car sped up, but not explaining why. That you press the accelerator, it went downhill.
Precisely. You've nailed it. It's description without explanation.
Okay.
And one final thing they consistently noted, candidates often don't make full use of the information that's provided in the question scenario.
The background story, the context.
Exactly. So the answer ends up feeling a bit thin. It lacks depth because they're not connecting the numbers they've calculated back to the real-world context given in the question.
Right, not linking the figures to the operational reality.
Got it. It leaves a lot of potential insight on the table.
Okay, so we've got these hurdles, no workings, just stating changes without the why and not using the scenario info. Let's talk solutions. What can actually be done? The examining team had ideas, especially for encouraging those workings, right?
Yes, absolutely. To tackle that workings issue head on, they've decided to use pre-formatted response areas in most analysis questions going forward.
Pre-formatted, what does that mean in practice?
It means you won't have to build a table or structure from scratch in the exam software or on paper.
Okay. So it saves time getting bogged down in layout.
Partly that, but it also prompts you. Can I give you an example?
Please do. Paint a picture for us.
Sure. So imagine you're asked to calculate, say, gross profit margin, operating profit margin, and maybe interest cover for a fictional company. Let's call it Loopco.
Okay.
And you need to compare those figures to the sector average. The response area you're given might already have columns set up like ratio, working, Loopco, and sector average. And the sector average numbers say gross profit margin 30%. Operating profit margin 10%, interest cover 4 times, they might already be pre-populated in that column.
Oh, I see. So it sets the stage.
Exactly. It clearly guides you where to put your calculation, your step-by-step working, and then your final answer for Loopco right next to the comparison figure. It just makes it much easier to provide what's needed and helps you pick up those vital method marks.
That sounds really practical. It structures the what and the how. But okay, here's where it gets really interesting for me. Moving beyond just getting the numbers right, how do you get to that deeper analysis, the explanation part?
Yes, this is absolutely key. Calculating the ratios is just step one. The next crucial step is to be really clear about what you've actually been asked to comment on.
Right, focusing the analysis.
Often it helps to set up some simple headings, maybe performance and position, depending on the question.
Yep.
Then, the best approach is usually to work through the ratios you calculated, perhaps in the order they were asked. And for each one, you link it back to the relevant line items in the financial statements.
So if you're looking at gross profit margin,
Yeah.
you should be talking about what happened to revenue and what happened to cost of sales. Those are the direct drivers.
Makes sense. And then you mentioned asking some crucial questions to sort of interrogate the data.
Yes, exactly. This is about moving from just calculating and describing to actually analyzing.
Yeah.
The examining team suggests 4 vital questions to ask yourself as you look at each ratio and its context.
Okay, let's hear them. What's the first question?
First, is there a difference between the ratio you calculated and whatever comparison you've been given, like last year's number or the sector average we just talked about?
Yeah.
Obvious starting point, but essential.
Right. Is it higher, lower, or the same? Basic observation. What's next?
Second, does the change or the difference you just spotted in this specific ratio have an impact on other ratios?
The interconnectedness. Precisely. How does a change in profitability affect gearing, maybe? Or liquidity? It helps you build a more holistic picture.
Okay, so question 1, difference. Question 2, impact on other ratios. What's number 3?
Number 3, is there an obvious reason for that change or difference? And this is where you really need to dig.
How do you find that reason?
You look at the relationships between the different ratios, like we just discussed, but critically, you go back to that information provided in the question scenario. Are there clues in the company's story? New products, acquisitions, market changes that explain the numbers.
Got it. Connecting the numbers back to the narrative provided.
Yes, that's where the real depth comes from.
And the final question, number 4.
Finally, number 4 pushes you towards solutions. What, if anything, can the directors of this company actually do to resolve any issue you've identified? Or perhaps, how can they capitalize on a strength you've found?
Okay, so that's moving from analysis to potential action. Recommendations almost.
Exactly. It pushes you towards thinking about actionable insights, not just passive commentary.
Wow. So it's a framework. 1, difference. 2, impact elsewhere. 3, obvious reason, check scenario. 4, what can be done? That feels like a really powerful way to structure your thinking.
It really is.
It takes you systematically from what happened to why it happened, and then even what could happen next or what should be done. Much more than just number crunching.
Absolutely. Following that kind of strategy helps you provide answers that genuinely have depth. They're well supported by the evidence you're given, whether you're analyzing just one company or, a whole group structure. It helps build that coherent financial story.
What a deep dive that was. So we started with this observation. Lots of people can prepare financial statements, but analyzing them, that's often where the struggle lies.
Yeah, that was the core problem identified.
We saw just how crucial showing your workings is, not just for marks, but for demonstrating understanding. And these new pre-formatted response areas sound like a really practical step to help with that.
They should certainly encourage better practice there, yes.
But then we got into the real meat of it, that 4-question strategy for analysis.
Right. Asking about the difference, the wider impact, the reasons why, especially using this scenario, and then the potential actions.
It's about moving beyond just noticing a change to really understanding the why behind it and the implications.
Connecting those dots, seeing the bigger picture, and even suggesting constructive ways forward. That's proper analysis.
So what does this all boil down to for you listening? Well, whether you're dealing with complex reports at work, maybe trying to figure out investment opportunities, or honestly, even if you're just curious about how businesses actually tick, try applying these principles. The next time you see a number change on a page, don't just make a mental note. Ask yourself, why? Why did that specific number move?
And how does that single change ripple outwards? How does it affect other parts of the business's financial health?
Right. And is there a story in the background info that explains it?
Yeah.
And ultimately, what might someone do based on this insight?
It's about actively questioning the data.
Exactly. What deeper stories could you uncover if you stopped just reading the numbers and started really questioning them?
We really hope this deep dive helps you approach financial analysis or, frankly, any kind of data interpretation with a bit more confidence, perhaps a bit more curiosity, and definitely some enhanced critical thinking.